Good evening.
Thank you all for taking your time out of your days to come to this workshop. We have some very exciting things to show you today. So, before I introduce myself, I'd like to play an introductory video for you. So, sit back and watch and enjoy. Well, all right. That's some of the things we experience here at World System Builders. So, without further ado, let me explain who I am. My name is Christopher Bow. I'm actually new to the organization. I just started a week ago, and I can already tell you I'm learning a plethora of information about finances. What I really like about World System Builder is the financial literacy campaign that they're running. So, a lot of people simply don't know a lot about finances. And in fact, that can cause all types of detriments and problems down the road. And that really resonates with me because I'm sure we all know family members and people that can use some financial education, but they simply don't have the knowledge. But this campaign right here is actually trying on a mission to encourage and educate people on finances so they can make informed decisions about their lives. And it's really amazing indeed. And not only that, but there's also a business aspect to it that you can also get involved if you choose to, which is also a great opportunity to learn and grow as an individual. So without further ado, let me introduce my colleague, Ms. Odetta King.
Hello guys. How's everyone doing tonight? Oh my goodness, Charlene. When did you sneak in here? Y'all, I'm so excited tonight. How's everyone doing?
Amazing.
Are you guys, do you feel like you're in the right place?
Yes.
You better be, because you're about to learn how to stack your coins. Okay? So who am I? My name is Odetta King, also known as a swap queen. I talk a lot about stacking your coins. And I actually wrote a book about saving money and making money. It's coins, stacking your coins. But I want to talk about this book today. This book, Saving Your Future, has been printed in over 1 million copies in several different languages in different schools. We're in Harvard, St. John University, MIT, and we're just really trying to get the word out because most people, do you think they're financially educated?
No.
Are they saving a lot of money?
No.
Are they going to be debt free?
No.
That's why we're here. That's why we're on a mission for financial literacy. Because this is something that's not being taught in school. And as a professor, guess what? When I lent my dean this book, she's like, oh my God, Odetta, we've got to create a curriculum, let's roll out a pilot program and see how many people are going to sign up for this class. And guess what? We have 15 people, and they're all retired. Why would retirees come to a workshop? Why do they want to learn? Save their money. But they're already retired. Why are they here if they're already retired? Shouldn't they be like, their money's running out? Their money is running out. And when I interviewed them and I said, what kind of job did you have? Where did you work? You know, what was your lifestyle like when you were working? They all had amazing jobs, paying good money, but yet still they're broke. And statistics shows 8 out of 10 Americans will retire flat broke. So is this important what we're doing here every Wednesday?
Yes.
It can change your life. It already changed my life. And I'm a saver. So imagine when I came here from Guyana 21 years ago, had my parents, shout out to my mom, I love her today, I love my parents, but today I'm teaching them information, which is kind of late because they're already retired. But had they knew this information, how do you think my life would have turned out? And now I get to do this for my kids, and you get to do this for your kids and grandkids. So our organization, we're on a national campaign for financial literacy. We're in over 4,000 centers across the U.S. and Canada. Every day of the week, some part of the U.S. and Canada, we're teaching families these workshops. How to increase your cash flow. Is it important to know how to increase your cash flow?
Yes.
Can we survive on one source of income today?
No.
It's almost impossible. You cannot survive with one source. You got to have multiple streams of income. And we teach people the importance of having it. Just don't wait until you get let go or life happens. Debt management. We teach you how to get out of debt, so you know exactly when you're going to be debt free. Is that something amazing?
Yes.
Absolutely. Everybody wants to be debt free. Who's debt free in this room? Okay. See? 3 hands went up. Everybody's hand should be up. Building a strong financial foundation. How do you know if your financial house is solid? Guess what? There are building blocks in this book that will teach you. So you know exactly what you should be doing when it comes to your money. Proper protection. Shout out to, we have some amazing guests in the house tonight. Have you guys ever heard the commercial? Nationwide is on your side. Come on, sing with me, y'all.
Nationwide is on your side.
They are in the house. One of our amazing partners, and we work with over 200 financial companies, top-rated companies. And does anyone know what's going on this month?
Insurance awareness.
Life Insurance
Awareness Month.
So we have a workshop dedicated called Proper Protection, where we teach you all the different types of life insurance. Not just a term, not just a whole. We teach you everything. Okay? We don't want to sell you anything. We want to educate you, and then you make the decision what's best for your family. How to build wealth. Is it important to know how to build wealth?
Yes.
Marcy, my Guyanese cousin, and we was in Brooklyn. Is it Brooklyn College or Medgar Evers? Which one? Medgar Evers yesterday, and this lady was in the audience, and she's here today. So it's amazing that we work so hard and we spend so much, and at 67 we have no wealth.
True, true.
Isn't that disturbing?
Yes.
How could you work for 30, 40, 50 years, and now in your 60s you have no wealth? We teach you how to get wealth. We also teach you how to accumulate assets, because don't you want to have assets?
Yeah.
Do we have any?
Mm-hmm.
Okay. Keep coming to these workshops then, okay? And then retirement strategy. When I ask people, what's your retirement? So many of them say, girl, I got a 401k. I'm like, okay. You need to come to these workshops. I got a pension. You need to come to these workshops. Because my neighbor, who had an amazing job, 77 years old, came to me last week. And some of you may have heard the story. His wife passed away. She had a life insurance, $20,000. So he got the $20,000. He already spent 10, and now he has his last 10. His rent and all his expenses is about $2,300. His good old pension that they keep telling y'all is good, and his good old 401k. Guess how much is his monthly income? $1,500. So if he's paying out 23 and his income is under 15, what kind of life do you think he's living at 77 years old? He is in a red every month. So I said, what are you going to do? He said, Odetta, my only option is to rent my bedroom and sleep in my living room. So now I'm going to have to take a stranger or a family member or someone to come in and live with me to help pay my rent at 77. I don't want that for anyone. Keep coming to these workshops. You're going to learn how to properly retire yourself. Don't depend on those job stuff because they can switch up on you or the stock market can crash on you, right? And then last but not least, wealth preservation. So if you come to all these workshops, you're going to have wealth, and now we want you to preserve it. We want you to know exactly what to do when you pass away so your kids are not scrambling or fighting each other, or they got to go to probate court, or God forbid, Uncle Sam is right there to sell the estate. This is important stuff that everybody needs to know, but only the 1% know. So this is what we do every Wednesday. And tonight, in honor of Life Insurance Awareness Month, we have an amazing guest speaker who's here to give you guys a treat. I promise you, if you don't learn something tonight, slap me. I just slapped it, okay? And get ready, guys. Take out your notes, your pen, because we just don't come here and sit. We participate, and we're going to put our finances in order because everybody needs to know this information. So, Jared, I'm going to bring him up. I want you guys to give him a warm welcome. He's one of our key people when it comes to Nationwide. And he's just on a national campaign for helping families and making sure that you guys are well protected. So please help me welcome Jared.
How's everybody doing tonight?
Amazing.
How do I look on camera here?
Handsome.
Amazing.
All right, well, let me know if everything's okay. I'm excited to be here. Chris, right? You were up here, you've been here for a week, and you're already public speaking? I worked at Nationwide for years before I ever wanted to speak. So I'm impressed. So I'll write your name down and then watch how well you're doing in submitting business. Someone to keep an eye out for. I like to tell a little bit about who I am before I get started about what we're going to talk about tonight. I like to do that because 5 years ago I didn't know anything about life insurance. All right, so I started off with a career as an attorney in California in 2006. All right, I had an office in San Diego, I had an office in Palm Springs, and the thing about being an attorney, which should have been obvious before I got into it, is that everything that I did, someone was trying to do the opposite of what I was doing. Okay, so my job was never easy, and I always compare it to being on a tightrope. All right, being on a tightrope is hard enough. You're balancing, trying to do your job. But then there are people at the bottom of the tightrope throwing rocks at you, trying to make you fall. So that's how my job felt for a while, and that became enough. And what I sought out to do is I just had the goal to work in a cooperative environment. Right? So I got to Nationwide, and within a few years of being with Nationwide, I found the WFG account, and it's just been a joy ever since. So I actually spend more time with advisors than I do with people from Nationwide. So then I wonder who I work for at a certain point, because I'm with you guys all the time. So I really enjoy it. It's a cooperative environment, and I tell that story because when I graduated law school, we took the bar exam in California. And people in California and people in New York will argue who's harder, but one of us has got the hardest bar in the nation. And I studied very, very hard and passed them the first time. And I felt smart, and I actually probably was at this point, in retrospect, the smartest I ever will be in my life, okay? And right from that, I went to my financial planner for various reasons that we're going to talk about some designs the next time I'm in. I went to a financial planner, and I was going to get life insurance. And so in my head, I'm thinking term life insurance. Everybody heard of term?
Yes, yes.
It's inexpensive, it's for a stated duration, and he talked to me about overfunding my life insurance policy, right? And at that point, I felt stumped. I'm like the smartest I've ever been, but I don't know why I would pay more for my life insurance policy. I just want to pay enough, okay? And what he didn't do at the time was, you know, he knew so much about life insurance, and I was down here. He didn't take a moment to meet minds with me, all right? Whether we've been doing it for a week like Chris, a few years like some of the other folks, whether we've been talking about it for a few days or a few years, we know more than we did when we first started. And if we can remember that and bring it down to the level of where people are at the first time we hear it, that's my goal. So we can have the conversation. That's what I'm going to try to do today with you guys. So when I first started to do life insurance, I only thought of life insurance for death benefit. All right, that's what we all think about. All right, life insurance, in the name, tells you what it does. It insures a life.
Mm-hmm.
All right, so I thought that's all it did. All right, and if we take a moment to actually explain to people that life insurance, while it's very specific in the name of what it does, it's actually one of the most dynamic, retirement vehicles, or one of the, the most dynamic financial vehicles that we have out there, and it does a lot of different things. So, you know, I've talked to someone who, maybe single and have no kids at home. They say, you know what, I don't have a need for someone else to get paid the death benefit. I don't have any kids at home. I don't have a spouse at home. I don't need life insurance. I say, you know what, I think you do need life insurance. There's actually a different reason for life insurance, and that's for long-term care. Right? Has anyone seen maybe a parent or a grandparent need special attention from a family member because they've gotten so sick? Yeah. My mom's currently in that for about 4 years now. My dad's been taking care of her. I'm thankful that he has her, but their medical bills are crazy. All right? When someone gets to the age where they need help because they're mentally incapacitated or physically unable to do it, that's called long-term care. So instead of somebody else getting paid a death benefit, I can get that benefit for me. All right? So that's good for someone who's single, who comes in and says, I don't need someone else to get paid when I pass away. I say, well, who's going to take care of you when you get sick? Life insurance pays you, and if you live long and healthy, somebody's going to get paid. So if you don't have kids or family and you want to give to a church, you can give that money to the church. All right? But what we're going to talk about today is my favorite reason for life insurance, and this is what's so exciting to me. So I don't expect to see any hands go up. Does anyone in here love to pay taxes?
No.
Think about how many times. So I make money, I get taxed. I spend money, it gets taxed. It's always getting taxed everywhere. I buy gas, it gets taxed. Everywhere it's getting taxed. Somebody's taking it. Does anyone do, every time I get a paycheck, and I've done it since the first time I get a paycheck, I get my paycheck, but then I stare at how much I paid in taxes. Yeah, I daydream. I could have gotten the best hotel on vacation, which I never do, if I just kept that money. So good. People don't admit to that as readily as you guys did. So I always do it. Life insurance gets treated special from the IRS. The IRS always wants to get their hands on fresh money, new money. You know, if you're on The Price is Right and you want a nice new car, you know you get a tax bill. That's insane, right? We don't keep that in mind. The IRS finds every way they can to get taxed. Certain financial vehicles get special treatment, all right? Has anyone heard of a 401k?
Yes.
It actually, 401k is the tax code it's referencing that talks about money growing without having to pay taxes. Life insurance, that's tax code, you don't need to know it, I'm not testing you, is 7702 is the tax code, and it actually tells you that when I overpay a life insurance policy, this is the part that my financial planner didn't tell me. If I pay extra in a life insurance policy, it goes into an interest-bearing account that grows, and as it grows, it's like an armored vehicle. Right? It doesn't let the tax man in to get their hands on the money, so it grows tax deferred. All right? But what it also has is when it's time to get the money out, the IRS says, I'm ready for it, I'm ready to tax you. I can actually get the money out of life insurance policy now without having to pay taxes. So now I've got all this fresh money that the IRS is ready to get their hands on, but with life insurance, it keeps them away. Did anyone know Section 7702? Unless you've been here with ODATA prior, did anyone who's getting into this know of Section 7702 benefits for life insurance?
No.
A lot of people don't. And so that's where my life insurance, or my financial advisor didn't meet minds with me. I'm thinking number 1 here. He's thinking number 3 here. We're not seeing eye to eye. I don't want life insurance. I don't want to pay extra. Had he just taken a moment to say, I understand you need life insurance for death benefit, we can get you life insurance for death benefit. What we can do is also create a retirement pool for you to draw income that grows tax deferred, and when it's time to get your money, you don't have to pay taxes. Okay? So that's the most exciting. So if you take anything from me tonight, if someone, if you're looking to life insurance, if one of your family members is looking for life insurance and they say, I don't need it, I don't have a family, what about taking care of themselves? I've got a lot of policies. I have 5 nationwide insurance policies, all for different reasons. A few for death benefit, because I bought small and bought more as I needed it. I have 2 for long-term care. I want to be in full control of my long-term care when I do it. And I also want to be in control of my retirement. Right? Do you guys have any questions before we actually get into it? But that's the 3 things, if you take anything: life insurance, long-term care, retirement income.
Does it matter how old you are?
No. So it doesn't matter how old you are. Technically, no. But what like all retirement vehicles, it takes time to compound money to grow. With life insurance, I'm thinking someone who at least has 10 or more years away from retirement. So 10 years that they can fund at minimum. If it's someone like you who's got many years to pay it, that's better. Okay, because we know when we're saving money, there's 2 things you want: time or money.
Yeah.
If you've got a lot of time, you need less money. If you got a lot of money, you need less time. If you got a lot of both, I wish I would be. Right?
So just taking out the policy long-term care for yourself. Yeah, what about if I wanted to take out one on you, or say my sister or sibling?
What if ask me that one more time?
Can you take a policy on your sister, or can I take one on you?
There has to be an interest in it. So my fiance, I could take one out on her, and I could be the owner and the payer, because what happens is if I lose her, I probably wouldn't be able to work. I'd be sad. I wouldn't be, I would need some sort of replacement of income. So I could take out a policy on her to get a death benefit, or rather, we can get a policy and get long-term care from it, because if she gets in a car accident. Yeah, it's on her. She's the measure. Her health is what Nationwide watches. If it deteriorates or she passes away, I can get paid from it.
Yeah, but the rule is there must be some sort of relation, yeah?
It could be family. It could be business. If me and you are business partners. And these are all these ideas. We'll go into a lot more detail moving forward, but just have these. If you want to hear it, then that keeps you coming back. So if we were business partners and I pass away, but my portion of my business goes to my idiot brother, and you don't want to do business with him, life insurance can pay you now to be able to buy out my brother. So that's business planning. That's very advanced, but I love it. I love it. All business owners should have it.
I have a question. I'm new. I was invited by a friend of mine, my friend. I have a question about life insurance. I thought that life insurance had to do with death benefit, where it's based on medical conditions of that sort. So what you're saying in the presentation is that if I was to get life insurance for myself, and the long-term care and tax benefits, is that in generating wealth in terms of asset protection?
Yeah, it could. That would be a reason for a death benefit. I could have a death benefit because I want my kids to have money while I'm gone. If I'm older and my kids are older, I can have a life insurance policy to create a legacy for them to, jumpstart them ahead in life and, really give them something. So that would be one of the many reasons to have life insurance, so to create a legacy. So, but you also brought up a question that it's still medically based. So with my policy, I still have to get reviewed medically by Nationwide. So, one thing I did mention about your question reminded me of. When we pay out a death benefit, let's say I got $1 million death benefit, it goes to whoever my beneficiary is, income tax free. Okay, so life insurance is really about saving you on taxes when the pool gets really big. So death benefit, my family gets it income tax free. Long-term care, I can get those benefits income tax free. If I've overpaid in it, I can get the money income tax free. It's all about protecting from taxes. The IRS is not nice always, they're really nice on life insurance. Anybody else? Great questions, I always encourage it though, so don't be shy about it.
So overpaying, I can just always go into my account and say, boom, come out?
And you can take your money out and leave?
No, overpaying.
Yeah.
I said, so you know, you have a monthly premium that you pay, but you're talking about overpaying, so I would pay that monthly premium plus whatever additional that I wanna add to it within the same month.
Yeah, so whatever you want is key, and so the technical term is it's a flexible premium.
Right.
So if I wanna pay more, I can, and up to whatever limits may be based on the size of my life insurance policy. There are some, but we can work past them, so if I know I'm gonna pay a certain amount, I can build a policy around it. But if I've got a car repair, something needs to happen and I need to skip a few payments, it's flexible. As long as I've overpaid it enough, we
And
can.
it's coverage.
Mhm. Anybody else?
With the long-term care, if you never get sick or so, what happened to that
Oh, that's a
policy?
different.
If I don't, so what it is, so somebody else gets it, my family gets it. So think of it like this. I buy a life insurance policy for a death benefit, all right? And a long-term care is this additional option I can add to the policy that says, you know what, this death benefit goes to you when I die. But if I get sick, it's coming to me, all right? If I don't use it, you get it. If I use it, you'll get a little bit. Sorry about that. Get whatever's left over. Good questions.
But if they don't use it, they could also use the cash value.
They can use a cash
the
value.
savings, was
Mhm.
savings.
Mhm. Yeah. So I have a policy that has a death benefit to it, long-term care, and savings. So if I get 65 and I'm unhealthy, I can get the long-term care. If I get 80 and I'm very healthy and no one needs it, there's a death benefit that pays out. Or if I get 65 and I just want to pull money from it, I can do it. It's kind of this multi-functioning tool. I know we said that life insurance just says it does one thing, but it actually is very dynamic.
So can anyone get life insurance? In particular, I'm referring to somebody who has a pre-existing condition, for example, a heart issue, etc., or the diabetic. How does this impact the long-term care aspect?
Well, I would say what we could do is if you have someone who has some sort of medical condition, we can get an underwriter on the line and discuss it. But, you know, with advances in medicine, 20 years ago, someone who may have had a heart attack would be declined for life insurance. People aren't dying necessarily from heart attacks. They may be having them, but people are living from them. We now underwrite for heart attacks now. So, you'd be surprised, and it's always worth a discussion. I always say yes, let's figure it out, and I don't ever assume no.
What
Can
about
you see?
strokes? Because a lot of people are experiencing strokes. Like I had a friend yesterday tell me that a friend of hers just recently died of a stroke like last week, just
Mhm.
unexpectedly.
We would just ask some additional questions. How long ago was it? Maybe the severity, what their treatment is. And, if it's long enough away, if it was minor, things like that, it's their age, other factors. It's worth a discussion, absolutely. We could potentially do it. I never say no unless I'm told no twice. My boss there, he can verify that. If I always assume that maybe there's a way I can do it. I'm going to try to find a way. So I always say, if you think you have a client, let's just always talk about it.
What about cancer?
That's another one that you'd be surprised about, as far as we would just want to know the severity, the stage, how long ago, what sort of treatment, always worth a discussion. So the medical ones, to get into more detail, I'm not a medical expert about it, but we do have 40 of them that work with WFG specifically, and people who work with them, right? WSD as well.
So the bottom line is get it before anything pop up in your head, in your medical condition, right? You're healthy now, you're young,
And it's cheap.
get it while you're healthy, because we never know what's gonna happen when we go out there tomorrow.
I am fully on board with that. So 39 is young for people to think about long-term care statistically, but I got, within the last year and a half, I got 2 policies on it because, like I said, I don't know, I go skiing and I go down the hill and I make it, I go faster the next time, I'm a boy. And then the next time I go faster, and if I survive, I go through the trees, and then I go faster the next time. So with that is I know I'm healthy now, get it now. Okay? So, car accident, you know, there's all these things that you cannot plan for, but you do know that you're in good health now. All right, so we call it the insurance-based income solution. I'm going to talk about option number 3 because it's my favorite. Creating income for me during retirement, income tax-free. So I'm going to see it as time permits which ones I'm going to go through. I'm going to probably talk about what is it, obviously, taxation, which is the big key and why I'm using life insurance. So we've got to never forget that life insurance is dynamic. So somebody might use it for long-term care. I may use it for tax benefits. Sure, it has a death benefit associated with it, but you always think about someone's goals. It's a personally owned life insurance policy, so I own it. And it provides an income tax-free death benefit to my beneficiaries if I pass away and never use it. But it also provides supplemental retirement income for me. I can pull from that cash value and that growth. And it grew tax deferred, right? Kind of like a 401k. If you know 401ks, it grows tax deferred. I don't have to pay taxes as it grows. But when it's time to take out the money, I can take it out income tax free. And it's important to know whether or not your income is taxable or not taxable during retirement. It's going to play a big role in how much money you have. And I'll show you an example. I'm going to jump ahead a few. This slide always brings pain to me when I see it. Right? I normally like to try to hide this number. But in my 401k, I love my 401k. I love my 401k because Nationwide also puts money into it. But it reduces my taxes now. Right? And for a while, I was always in love with it because my taxes are being reduced now. Every dollar I put in is a dollar I don't have to report to taxes right now. All right? But what I didn't realize, I'm in the best place right now to be paying taxes, much better than I would be in retirement when I'm not actually making any money. All right, so my focus started to shift because when I saw this is I didn't pay any taxes on a 401k when the money went in, but I'm going to have to pay it when it comes out. So assuming I'm in a 40% tax bracket between federal and state, but I need $50,000 to be able to pay my bills through the years, the number's there, but how much do I have to take out to get that $50,000? $83,000. So you have pain every time looking at your paycheck and seeing that, you know, whatever it is that went out for taxes. Imagine the pain here. I get paid every time I see it. $33,333 has to go. So I have to take out $83,000 just to get $50,000. So what if, in addition to my 401k, I can also pull from something that doesn't pay taxes, so I don't have to be stuck with giving so much of my money away. And that's where life insurance comes in as a supplement. You know, we've got hopefully Social Security, but we can't rely on that. We can rely though on our savings, our 401k, and if we diversify that, we can see what we can do about minimizing our tax liabilities. Any questions, Eric? Anyone else feel pain thinking about sending $33,000 in taxes?
So what you're saying is that with a 401k, if I was to withdraw money from a 401k account, I get taxed, right?
It's all fresh money.
Fresh
The IRS has not got their hands on it. And fresh money is a Jared term, it's not a technical term. So it's fresh money. They like when they see it's fresh, they want to get their hands on it. And all of it's fresh because when my 401k goes in, I don't pay taxes now, I pay taxes later.
And if you take it out before 59 and a half, pay extra 10%.
Yeah.
So now it's your income tax rate and 10% on top.
So even more pain. If this was earlier than 59 and a half, is it?
What if you touch it by 62?
Then you still pay taxes, you just don't have that 10% penalty. Still pain inducing. All right, so when we're saving for retirement, there's different sort of tax treatments. These are the 3 different kinds. Okay, there's things that are called taxable, which is tax now. So if I make any money in my bank account, who does? Or any money in their savings account, things like stocks, mutual funds, those are things that are taxed now. As it grows, I pay taxes on that growth. All right, and then we have things that's called tax deferred. They grow, but deferred means later. You pay taxes later. All right, these are great. All of them are great. I think of this not as one's good, one's bad. They're just, it's good to have a combination of the two. These are taxed later. All right, so as you saw, if I would have stayed with my initial idea and fallen in love with that 401k, I'd have to pay a lot of taxes later. All right, then there's things like that are tax-free. They grow tax deferred, and then I can take that fresh money in a tax advantage way or tax preferred basis, meaning if I take it out in the form of a loan against myself, then I don't have to pay tax on that. Okay? Any questions on these? So taxes. So when I look at my paycheck, I always look at the federal income taxes. It's the biggest and most painful. There are a lot of other taxes too. That life insurance, it's that armored car. It insulates you from the tax person, right? There's state tax. There's local tax. So I have to pay taxes. When I worked back in headquarters in Ohio for Nationwide, I paid taxes where I worked, and I paid taxes where I lived. Right, that was new. That was another reason to get mad about taxes. If I didn't have enough already. FICA, Social Security tax. And one thing too, just a small note I'd like to point out, is that when we get Social Security, we have to pay taxes on Social Security. So if I have a job and I get Social Security, it just means more of that money I get put in a higher tax bracket. If I have Social Security and life insurance, I take a lot in life insurance, it doesn't change my tax law. It doesn't change how much my Social Security is. I know. So it's that armored car. So I like this because I'm a visual person, I'm a visual learner. We look at the different tax vehicles or retirement vehicles. You know, we've got taxable investments, so for ease, let's just think stocks. We have a 401k, which I love. We've got IRAs right here, municipal bonds and life insurance. So I like to see what features they have. You know, if my goal is to have my money grow tax deferred, right? I see a 401k does it, IRA does it, life insurance. If I wanted to see something that I can also get that growth on income tax free, now I see only the Roth IRA and the life insurance has both of them. All right. Another thing with the 401k, let's just assume I just loved it, I loved it. 401k max on that, is it 19,000 now, 18.5? 19? It went out this year, sometimes it's gonna change. The most I can put in is 19,000, all right? Or what if I'm working with someone who 19,000 isn't enough that they want to put away? They can't put any money in a 401k, there's a max to it. I love the IRAs, it's $6,000, okay?
It's 6 now?
Both of them went up $500.
Oh, lovely.
So if I've got these great ideas during retirement and I need more places to put money, you know, we're the ones, life insurance is a good solution for that. Al was talking about this, withdrawals. So which one of these has no penalty when taking money out? Well, stocks, we know we can just buy and sell them without any penalties. Life insurance and municipal bonds, you know, we can get money out of penalties, but you know, what if I only put my money in my 401k and I wanted to take money out? I'm going to get penalized for taking money out of that. Life insurance, if I've got money in, I can borrow from it, pay it back, borrow from it, pay it back, take it out, whatever I want to do. So one of my ideas is I fund it enough, so sometime down the road I need a car loan. I hate paying interest, so maybe I just borrow the money from myself, pay it in cash, and then just pay it back myself. So it just allows you to take money in and out freely. Okay? And which one do you think has an income tax-free death benefit associated with it?
Life insurance. Yeah.
That's a good one.
Yeah.
So it's a lot of different ways to get money to you later without paying taxes. All right, so we've got a few different products. This is a talk for another time, but let's just kind of put it out there what they are. We'll ignore this, all right? We'll really today just kind of tease the idea of index life, right? One thing I know about stocks, the stocks are great. The market's doing awesome. I have unlimited upside potential, but if it's not doing good, I can lose money. We might be on the verge of losing money sometime soon. Hearing that for 2.5 years, but being at in one of the largest expansionary periods, or the longest expansionary periods in history, I don't know. If you're talking to me, no one can predict the future, but I'm a little nervous about it. So, we've got things like stocks that are exposed to market downturns. The cool thing with index products, all right, you'll hear this term a lot. We've got all these different solutions, but the one that tends to be favored for people who don't like losing money, like me, is it protects you from market losses. All right? It says if we see a loss in the market and market tanks 30%, Nationwide and other life insurance companies are going to guarantee a certain minimum. Nationwide says the minimum 0, so if it goes negative, we're just not going to credit any money, but you're not going to lose any money as a result. Right? But if the market does well, we have that upside potential. All right, up to here in New York, I think it's about 13%. Okay. Right, so 13 and 0%. So someone like me, I didn't start making any money until I was 27 years old. I spent a lot of time in school. All right, so I've grown a very close bond to that money that I was nurturing through those years to try to make, and I don't want to lose money under any condition. That's why I like IUL. Right? The Index Universal Life. I can participate in the market, but I'm not going to take a loss if I chose to do it at the wrong time.
Very interesting question. So as a student, what sort of opportunities are there to make money? Like I said, you're studying and you're putting a lot of money investment into your education until when you're done in school. So, I mean, as a student, what advice would you have for a student?
Well,
apart from entrepreneurship in some aspect or something.
So I always say, as a student, I don't think it's ever too early to start with something like this. I mean, life insurance, there's 2 reasons why I think we should start early with this. Is one, because the younger we are, presumably the more healthier we are, and the pricing is just better to get into life insurance. And we can also design a policy. So one of my policies started off with a low payment amount, and I was going to pay more over time. And so it allowed me to lock my policy in early, because one of the things I said is one of the 2 things that we need to save, our 2 biggest friends are time and money. So what is the opportunity for the student to get in while you still have a lot of time, and you're not wasting time to get into it? So you price better, and you have better opportunity for compounding money. And that means money grows on top of money that's grown, and so on. Okay, and I've got, hopefully over time, hopefully make this a regular thing. I have ideas. I'm the idea guy. You can use life insurance to save for college. You can use life insurance to protect my dad, who's a co-signer on all my loans, while I'm also saving for retirement. I had all these ideas, and I'm just going to leave you with that. I left you with tons of questions, but that's an opportunity for you to call me and ask me.
Yeah,
All right. There's a lot more questions, but I have a lot of ideas. So the mechanics of it, how does it work? Generally, in this sort of plan, when I'm doing income, I own a policy where I am the one who's insured. All right. I'm not a huge fan of pay the maximum that you can. Don't get too caught up in these fancy words and acronyms we don't know. The more money I can get in faster, great. If I need to stretch it out, my payments until I'm 65, that's what I'm doing. I'm not asset heavy. I'm not sitting on a lot of assets that I accumulated from a startup when I was 20 or some sort of inheritance. So I pay as much as I can until retirement. If I met that startup guy who's just a genius, I would say, if you can, get money in quicker. So this says it's typically for 15 to 20 years, disregard it. It's whatever works for your clients, and we figure that out. So how do we take out the money? All right, this is kind of the tax-free $1 million question, is when I pay my money into life insurance, That's after-tax money, okay? The play with taxes is later, not now. So if I put money into, let's just even think my bank account. I've already paid taxes on that. So it's time to take that money out. The tax guy, I know he always wants to tax me, but he's not taxing on me to take my own money out. So with life insurance, I can take out my money through withdrawals without getting taxed. But it's all that fresh money. Over 30 years, it's followed the market. It's gained some growth, hopefully. That's fresh. So once I've withdrawn all my money over time, I start taking loans out against myself. And loans aren't something that I put on my tax returns, okay? When I got a car loan, I didn't report that to on my taxes. So loans, as long as I take it out in the form of loans and this policy's still out there and still going strong, I can get that money income tax free. Okay? And we have wash loan provisions. So a loan comes with an interest charge, but at the same time, it gets the same equal credit, and it's a wash. You just have that charge in there to satisfy the IRS, and we credit your money so your money's not getting eaten up by the loan.
I'm confused by that concept. Why don't you explain that for me again with the loan?
So when you have fresh money, the IRS always wants to get their hands on it. So when I put money into my policy, let's say over the course of 30 years, I put $100,000 into my policy. All right. Over time, the market has been also adding to my policy. It's been growing like any sort of investment. So when it's time to take out the money, that $100,000 that I put in, I just take it out in the form of withdrawal. Just taking it out of the policy. So then the loans are all fresh. If I were to withdraw from it in the form of just a withdrawal, the IRS would tax it. So what I do is I take it out in the form of a loan, right? Because loans are not taxable income for the IRS. So I take a loan against myself, and to satisfy the IRS, Nationwide has a charge, a 3% charge on that. So it's a loan. But at the same time, Nationwide also pays you back 3%. So it can't be back. We have the charge there to qualify as the loan. But then we say, we'll also credit your account, 3%. Do you blink?
Did you guys know that?
I have so much good. I'm the only one with this knowledge. Now you guys. I didn't know that, and the reason why I started my story on, what I did before is unless you're specifically taught this, no one's going to know it. No one knows it. I always ask for anyone who's heard it for the first time, does anyone know Section 702 in the life insurance? And I'm confident that someone is not going to be like, well, I actually heard about it. No one's heard about it, unless you've been around for a little while. All right? So that's why I like life insurance. All right? I like life insurance for a lot of different reasons. I like life insurance because someone who has a family needs life insurance.
Is that why? Sorry, I don't like to take over, but
I like this.
Is that why it said that life insurance is for the living and not for the dead?
Right.
Yeah, I mean they're called living benefits. So many people think that it's death benefits, and it has that. It also has living benefits. So, like everything, there's pros and cons to everything. Okay, let's talk about the advantages first. Right, it doesn't impact qualified or non-qualified plans. So in English, that means my 401k, if I put $18,000 in it and I put $20,000 in my life insurance policy, it's not going to affect my limits over on those qualified plans. I can still put that money in. All right. There's an income tax-free death benefit. So if I put tomorrow $300 into a stock, I died a week from now, without doing any sort of market calculations, my next of kin is going to get $300. With life insurance, it creates wealth and leverage today. Right? So if I have a $500,000 death benefit, if I have a $1 million death benefit, and I put $300 in it, and I passed away soon, before I had a chance to accumulate wealth, they're getting a lot of money. So it leverages money immediately. All right? They get that income tax free. Alright, so it's a death benefit. I didn't use that living benefit like I thought, right? If I had my money in a stock, it's just too bad. If I had money in life insurance, somebody's getting paid something. Alright, no contribution limits, alright? If I wanted to put $100,000 a year, if I had that ability, I can build a life insurance policy that allows it. If I want to put $300 a month, I can build a life insurance policy that does it. If I want to put 100, I can do the same, alright? With a 401k, it's one number. With an IRA, if I make over a certain amount of money, I may not even be able to put money in an IRA. Right? No required minimum distributions, believe it or not. Sometimes people don't want to take distributions from their assets. In a 401k and an IRA at 71, you have to start taking money. With this, I can keep the money in, and then that passes to someone income tax free when they pass away. There's riders, so I think of riders as features to a car. I get a car, but I get that backup camera, which Al knows I am dependent on it, or I'm not parallel parking anymore. I used to be good, I promise. I promise I used to be good.
He's from Ohio.
Yeah. I used to and we had a riding lawnmower, and I used to do parallel parking between the trees when I was like 10. So I was good. But then I got that added feature, the backup camera, and I'm completely dependent on it. So riders are just like extra added bonuses to maybe customize your life insurance policy. That's when we keep talking about long-term care. So I think the question back here, as far as it's life insurance, but I'm able to, if I add this feature, I can pull from it myself. All right. So disadvantages. All right. You have to be insurable. All right. We talked about specific, health ailments. That's questionable. But if it's so severe or recent enough that we can't write life insurance, it's dependent on somebody's health. Okay, so we do a medical analysis, but we have what's called field underwriting too. So if you have something you think, just give me a call and we can get a medical professional on the line. If it's during business hours, 8 I believe, about 6 o'clock, we'll get someone on the line and clear it up. All right. Premiums are not tax deductible. Now, a lot of people get caught up on this. They're worried about tax deductibility now, and they forget about, my few $100s I put in a month. Tax deductibility would be nice, but 30, 40 years from now, that's what I get back. I'd rather have the tax-free savings on the back end. That's what life insurance has. So we don't deduct from our taxes today. We get the money later, tax-free. If a policy lapses, let's say I didn't leave enough. So when I pull loans from a policy, I want to leave enough money in the policy so the cost can be taken and the policy kind of lasts forever. If I take too much money out, so if Nationwide says you should take out $40,000 per year, but you take out 50, and the market tanks, the policy doesn't have any money in it anymore, all that gain that we got in the form of a loan could trigger a taxable event. So you want to do it with some sort of strategy. Nationwide provides that strategy for you. We can help you through it every year. And as we take withdrawals and loans, it reduces the death benefit dollar for dollar. Okay, so remember, if it's person number 3, we have death benefit, long-term care, tax benefits. If I'm using this with the main idea of having tax benefits and income, it's going to reduce my death benefit. But I didn't buy that policy for a death benefit. I bought it to protect me from taxes. Any questions there on the pros?
So if you pay back the loan, would that push up back your death benefit?
Great question, yes. So when I take out loans, it reduces the death benefit. If I pay back the loans,
It goes down.
it goes up. Anybody else?
And if you die before you pay the loan back, they'll just take that out.
Yeah.
Yeah, so if you die before you pay the loan back, which a lot of these policies, many people don't ever plan on paying the loans back. Because you take out the income, you leave enough in, so the policy just lapses until I pass away. So what happens is I got all that money through loans, income tax free, and then my heirs get the death benefit minus the loans I have, they get the rest, and it's tax free.
It's free money.
Tax free money. When I get the money from the policy, the idea is that it's tax free. See, the 401k, the money going in is tax free, but everything that comes out is taxable. So it's good to have a little bit of both. Nice to bring my taxes down today, but I'm really starting to focus more on when I get retired, that's gonna be a time where I'm least capable of paying taxes. So I'm not making any money. And so giving up taxes, you think it's painful now, when we could replenish our bank account. Think about it when that bank account's not getting replenished anymore. I don't like the sounds of that. All right. So I'll just leave just with certain ideas for those who have been around and looking for ideas with this. You know, business owners are good, you know, everyday people like me, good person for it. Business owners are great for it for a variety of reasons. Business owners don't necessarily have access to 401ks and IRAs. So life insurance is something anybody can get regardless of your employment situation. Professionals, doctors, attorneys, I'll skip that one for now. People who've maxed out their qualified plans, so the $18,000 to $6,000, people who want to contribute more, life insurance can provide them that opportunity. All right. I don't like this either. I don't like parameters. I think a little bit outside of parameters. We can write life insurance, and this is something we'll go over at some point, for someone as young as 15 days old. And why on earth would we underwrite for someone 15 days old? Because they have a lot of time. So we don't have to put in a lot of money for them to have money for college, or have money for their down payment on their home later. Or if you keep it in and let it ride for 65, 70 years, that's a lot of time. And so now they have a lot of money to take out for them. Those ideas make me excited, and at some point we'll go over those ideas, but they're very detail oriented, so it's good to lay that foundation, because then we can show you the fun stuff with this. And it says 55. I think someone who's at least got 10 years to fund it, and maybe a few more to let the market kind of do its thing. All right, so I think 15 days to someone maybe 10 years or more away from retirement for the cash accumulation portion. I'm also thinking someone who needs personal life insurance protection. You know, someone who's concerned about saving money for retirement, but also has a need if anything happens to them tomorrow, that their family's taken care of. Flexibility in getting cash value, that's important. So if I want to buy a car and I want to take up money on my 401k, I'm paying 10% on that. So that's the worst loan. It's even worse than just taking out a loan and paying it back. With my life insurance, I can take out a loan, the charge is 3%, the credit is 3%, so it's a wash loan, I can pay it back, and then be back on track to take that money during retirement. All right, so that's what I have for you guys here today. There are a lot of things that we can do with life insurance, okay? Life insurance is exciting to me. Life insurance, by its name, is very static, but it's actually very, very dynamic. So, if you guys remember, everybody's got a use for life insurance. We have a death benefit. We use it where someone else gets paid. We have long-term care where we get paid. All right, we also have income where I can, you know, set up my retirement income, you know, 30 years down the road. Okay. So, do you guys have any questions before we end that there? I think it's exciting. I think it's exciting because if I can find ways to not pay taxes.
I have a question about long-term care. Like, for you to be able to get that benefit, how much would you have to pay into the policy?
So how much you have to pay is very, very dependent on a lot of things.
Okay.
So how much you have to pay is very, very different from what I have to pay, very, very different than what she has to pay. It just is, you know, age is a factor, gender is a factor. So ladies, you guys pay less because we die earlier, and therefore we're more of a risk insured. Your health, you know, so if you've got a pretty clean slate of health and I don't, you know, so it based on a lot of things, and also how much am I asking for? All right, so an illustration would be ran, which is just a proposal saying if you want this much, and assuming that you're in great health, you could expect to pay this level amount. And if you want to pay more, so you can accumulate cash, you can do so.
How about like a catastrophe in case of an accident or something like that? Does it cover that, or only health issues or?
So long-term care covers you. The way you qualify for it is if you have a cognitive impairment. All right, so hopefully that doesn't happen because that's generally unrecoverable. But if you have physical elements. So the technical term is if you're unable to perform 2 of the activities of daily living, 2 of the 6 activities of daily living. So you think of everything you do in the morning. You transfer, you move around, you use the toilet, you continence is, waiting until you get to the toilet, dressing, eating. And there's one more, I always get 5 of the 6. Bathing. I always forget to do that.
Anybody need a job?
I revealed way too much. I always forget one, and that's always bathing. So if you cannot do that, like Kevin Hart, you hear about Kevin Hart?
Yes.
So he's probably gonna need some help. I think I kind of have a feeling they're downplaying it, but that's just my opinion. So if he got in a car wreck, and he's unable to perform those, he needs help, after 90 days of doing it. So there has to be some sort of, it can't just be a few days. I hurt my back, I'm staying in bed today. You'll start getting paid. And Kevin Hart's probably gonna get better. So then, then puts a pause on that long-term care. You still have whatever you have left, and then you can use it later if anything went right.
So there's no age restriction, once you have that coverage.
Once you're 21, you can get it, 21 and older, and then, yeah, I got excited for it too.
In his case, and you see, he had such an awesome vacation in the beautiful island of St. Lucia where there are no problems. This is where I was born. So, he wrecked himself. But you're saying that if he had this coverage, he would qualify for the long-term care?
If he was unable to perform 2 of those activities of daily living, he can then start pulling that money, right? Which then gets paid income tax free. So, if I got $10,000 a month from it, and I needed to get change my master bedroom to downstairs because I can't go upstairs, I can use it. If I've got a nurse, I can do it. If I can pay them. If I had a niece or nephew who provided me care, I can pay them. So if they had to leave their job to take care of me, so I'm given cash, I can do what I want with it.
What's the maximum for the death benefit?
So you pull anywhere from, in New York it's 2%. So if I have a $100,000 death benefit, I'm getting $2,000 a month for 50 months.
For how many months?
So 2%, so it allows you to withdraw from whatever your death benefit is for 50 months, which is a little over 4 years. So if I've got $1 million benefit, somebody else do the math. Yeah.
20,000.
Yeah. I mean, there are limits to it though, but that one's a little high, so, what's your question?
Oh, yes, can you roll over your 401k or Roth into life insurance policy?
No. So here's what I remember. This is the mnemonic I remember. You can do a life into a life, or a life into annuity, but you can't do an annuity or something else into a life. So everybody wants to go to LA, but no one wants to go to Alabama. Always tricks to remember stuff. I can't do it without tricks.
Until the one person you meet goes, I'm from Alabama.
Yeah.
It's gonna happen one day.
I never thought about that, yeah.
Jerry, can you talk about how a parent can use life insurance for college so they don't get stuck with the bill if their kids decide to run away and not be responsible and pay for it?
So I like using life insurance for college planning. You have to start early because remember I said I like 20 years. But if we can, fund a policy, and we'll show you some ideas, at some point is, I like life insurance. All right, has everyone here, or at least heard? You don't need to know a lot about it. Has anyone heard of 529 plans?
Yes.
So I'm not a pro on it, but 529 plans are almost like a prepayment of scholarships, or I'm sorry, of tuition, and then that money is specifically then reserved to pay for the tuition. But there's a few things with it. It's awesome. I think it's after tax or before tax money, and then it doesn't get taxed when you pay. But if you're applying for financial aid, the money that's in there is an accountable asset. So, it could affect somebody's ability. You're trying to save money, but in doing so, you may affect your ability for financial aid. Life insurance is not an accountable asset. The second thing is, my goal is that I've got the smartest kid around. So I don't have to pay for college. They're paying down and down there. So if it was a 529 plan, I can get that money, I believe, but penalties now be assessed, because I don't need it, so I lose them that money. Life insurance, you could repurpose it, all right? You don't have to tell anybody why you wanted it, or, you know, for college, or that you're not using it, you could repurpose it. Right, so I like the life insurance because it has a higher, it participates in the market, so it grows better. I can repurpose it, and the money that I have in there does not affect my eligibility for student loans. So there's fun illustrations, it can be customized any different way, but the earlier someone starts, generally 4 or under. So if we've got, so I think of it more like, I think about grandparents, when they want to start saving for their grandkid. They seem to show the most interest in it. I know when my nieces and nephews were born, we threw a little bit of money, but nothing like college planning. But people do that to varying degrees, and then life insurance is a good way to do that. Because then you can take the money out and become tax free.
Is everybody here agent, licensed agent, or they are guests here?
Both. Yes. Both.
No, something I was gonna say, something about life insurance for college. A lot of agents misuse that, and they go into people's house just to make a sale, but not really giving them the right information, because college is extremely expensive, and if I take a 1-year-old child, there's nothing I can do really to really give that child life insurance that can be able to pay for college in full with, let's say 4 years, maybe a year, something like that, because the insurance cannot take that much money because of the age of the child.
I can build a bigger life insurance
We
policy.
can do that. We can pay for college.
Yeah, but they can reject it because the child is too young, and that child has to, the parents have to have about 4 times the amount, unless there's a specific plan for college for the child. Otherwise, if it is based on the parents itself or the amount of insurance the parents has, definitely it may not be possible.
So it would be dependent on what the parents have in New York, if they're under 4.
Right, under 4, about 4 times what the child has, and if they are, I think 13 or 14, then the parent has to have twice the amount. So let's say either for me to build, let's say, $80,000 over a 4-year college for that child, which will not be sufficient anyway, regardless of how we turn it and which college they're going to. And so we want to make sure that the people right now, all the agents know they have to do a really good PFS to make sure that they can see the amount of insurance that child will need, and will the parent be able to they can pay for it because it will still be cheap, even if it is $1 million. But now, can the parent afford to get $4 million for themselves? Or do they have sufficient income too? Because they have to be able to qualify for it before they can think about the child. Because in the insurance mind or the underwriter's mind, that they're looking at the child death, or wouldn't the parent turn around and harm that child because there is so much life insurance on it? Yeah, they can use college as an excuse, right? And then at the end of the day, they find out to do something. So the underwriters are looking at all this stuff.
Sure, we'd look at it, and if anyone's looking to save for college, they certainly would have the means to it. So with me, I'm insured for $4 million, okay? For someone who's 15 days old in New York, in order to save, let's just say 6% growth, they would need $1 million to support the money I need to get in to create income during college. It's $1 million benefit that newborn has. I have $4 million, already, so I would be able to do it. So I mean, they have to have the means to do it, all right?
But
So
we're also talking about putting it on a child. You can do it on the adult too.
we can do it on the adult too,
Right,
yeah.
so I think right now what you're saying is, and one of the things you're caught up on is the fact that we're doing this on a baby.
On the baby, right?
But if I do this on the adult and say, I'm buying a life insurance policy right now, it covers my family, it covers my child,
If
it
I pass
covers
away,
college.
or the cash.
Not even if I pass away,
Yeah,
because
if
I've
it
added
can
that
be used,
benefit,
yeah.
can be used towards college.
Now, it will be a lot more expensive though.
It's more expensive, you're right, but there are ways, it's not just on the child itself that there's the new limits and what it is. So what we're getting at right now is it's that no matter what obstacle gets in the way, every single event, right, every single person you talk to is gonna be different. And we have to have those conversations. So with anything in this world, nothing blankets everyone, right? You're gonna sit down with a client and what they need, what their goals are, what their needs are gonna be different. And if the child's the answer, the child's the answer. If the parent's the answer, the parent's the answer. If the grandparent's the answer, the grandparent's the answer. But everyone is different. So if we're answering all those questions, we're looking at it from a holistic point of view, and to your point, which I loved, not just going in to trick someone to sell college through life insurance, because that's just fraud. Not doing that. We're actually giving them something they need that covers all the bases. Well, now you're actually doing what we need, which is financial literacy.
And with these designs, you've got a lot of, well-knowledge people on the team. We also team up too to work on cases, so we've got a lot of minds looking at it. And that's one of the things you take into account. So if you're looking to write something for a kid and the parents don't have coverage, either just do it on the parents, save in that sales capacity, or get coverage for the parents and get it for the kids, but there's always strategies that can be implemented. And certainly the underwriters will look at it and not allow funny things.
Yeah, so I know this is not the last question, neither am I moving the vote of fines.
I love your questions for the
Yes,
record.
but you said something popped up in my head when you said, listen, I'm insured for $4 million. In your experience, when families come to you, is it a wise thing, or do you find a lot of people, when they take a life policy, for example, I'm insured for $4 million, do I tell my wife that?
That's on you, I don't know.
Yeah, depends.
Because people do a lot of crazy things. I know one of the rules of life insurance is like, as you said, there must be a relationship. You cannot just take out the policy.
If I have a life insurance policy on me, I don't have any sort of legal obligation to necessarily tell my spouse. California may be a little bit different. Yeah, but I mean.
Well, you might not have, here's the thing though, a lot of state people don't know this about the states. You might not have a reason to tell your wife, but if you die, your wife doesn't know, she has a big reason in most states to be able to go after it first.
Okay.
So please be aware that even though we might not take it out, knowing about it, if that person dies, the other person finds out, they leave it to somebody else. And I think it's 35 states, you, as a spouse, you can go after that money and go get it.
Namely California, that's that common law
And
state.
New York, I know that, so.
But
You have the first right to it.
Good to know.
We don't want to see this on Dateline, folks, like. Right, we want an honest conversation, everybody knows what's going on, everybody's signing.
So who wants to know if their spouse got life insurance now, huh?
So I know your concern, and we get that all the time. And one part is you have that option, like you mentioned, but also you can control it too by learning a higher level of planning and repositioning the trust part of it, or opening certain plans like a trust to make sure that just in case you protect yourself too. And they're not going to get the $4 million immediately, nor is it going to be just dedicated for them. So you can put contingencies to make sure that the individual is protected, because I'm protected for $1.2 million, and my brothers and my parents, and I don't have a spouse yet. If anything happened to me, then there's an issue. So that my family will have that benefit. But I know that they love me, but also on top of that, there's certain documents that make sure it protects me too, and they don't just get the funds like that immediately. So there's different ways, and that's why, like you mentioned again, Al and also Jared have been talking about, and Odetta, financial literacy is very vital. And those certain fear that people have when it comes to planning, certain things like that, is going to be addressed to make sure that you have the peace of mind.
Wonderful, thank you.
So let them sign a prenup.
Good luck with that conversation. I wouldn't want to have that. So yeah, whether this is an idea for you, someone in your family, I think life insurance is something for everybody. And if you guys have any further questions, bring it to Michelle, bring it to Odetta. We can talk about it as well. But I'm excited to hear what you guys like about it. Okay?
Thank you.
So did you guys learn something tonight? Okay, so one thing, what did you guys learn?
He hates tax.
Get life insurance now.
Get life insurance now, well, you're healthy and popping, okay, you got your health intact, what else? One other thing you guys learned? That stood out to you.
Yes, I was about to say.
Tax-free. Oh my God, like, life insurance is like, okay, IRS is not messing with me. Go away, my money's protected.
Yeah.
So, how many of you knew this before?
I didn't know until I joined WFG, WSB.
You didn't know until you joined. Who else? Who's here for the first time? And did you guys learn something today?
Yeah.
Are you glad you were here today? This is what we do every Wednesday. So, do you think other people need to know this information?
Yes. Everybody should
Do
know.
you think they know it?
No.
Exactly. So, if you have life insurance, a lot of times when I ask people, do you have life insurance? They say, oh yeah, I do. I know they don't know what he just did, right? So it's not about just having life insurance, it's about learning about life insurance and knowing which type you have. Because if you have a term, can you put money in there?
Nope.
So what's gonna happen to your retirement? And you better die within that term, right? So it's not just about having life insurance, it's about knowing how to really protect your family and yourself. And for someone like me, I mean, even for people who are single, yeah, I'm stacked up too with life insurance because I want to make sure when I get old, my money's going to speak for me because I ain't got no kids. Okay, so even single people, 10 years ago, if you had told me buy life insurance, my response was, hey, I got my burial money. It's not about your burial money. It's about your living money. It's about making sure that if you get sick, you got $5,000, $6,000, $7,000 coming to you because now you can't work. Right? Now I could hire my mom to stay home and look after me because that's the best care as opposed to having a stranger come into my house and paying them a fee. And it's about saving money. If you love saving money, that's where you really suck the money in because it's tax free.
Awesome.
And you're never going to lose money. So how many of you like to lose money? Exactly. So now we just showed you a strategy that allows you to save your money smart, like you were saying tonight, save your money smart, but also protect it from downside because anything can happen with the stock market. So if you have life insurance, we commend you, that's good, but now we're going to take it up a notch. And if you don't have life insurance, you need life insurance while you're young because it's cheaper and you're healthy, so you're insurable. Don't wait until, God forbid, 5 or 6 years down the road, now you get hit with something and you're uninsurable. And because you don't have $1 million sitting anywhere, how is your retirement going to look? Sad. Okay. So I do have some handout that I'm going to pass around. For those of you who are visitors, please take a minute, fill out your service, let us know what you need help with. This month is Life Insurance Awareness Month, so even if you have life insurance, let's set up a time and sit with you, go over what you have, and make sure that you're fully protected. Because we don't want to leave money for the people, right? We just want to leave money for ourselves. Right? Some of you, when he was doing it, they were like, nah, I don't care about that dead baby, but I'm living just enough to bury myself. Okay, so those of you who think it like that, make sure we sit together to make sure we got enough money to take care of us while we're alive. And for some of us who have our loved ones that we really care about, and we don't want to have them struggling after we're gone, we also want to sit with you to make sure that, hey, you're putting things in place to take care of the next generation so they could be 10 times better than us. Because you know what? All the cultures do that. They put things in place for 2, 3, 3 generations deep. Not just your kids, but your great-great-grandkids. Who wants to put things in place for their great-great-grandkids? So someday they'll be saying Auntie Odetta or Auntie Charmaine or Auntie Marcel, you know, I don't know her, but she left this money for me. And oh my God, thank you for her. And you still got her, like you don't even know this person, but you got her frame, her picture on the wall because she made life easier for you. How many of you have that right now? Did somebody make life easy for you and left generational money, even if it's $10,000? You guys get an opportunity to do this for someone else. Isn't that a great thing?
Yes.
Keep coming to these workshops. Fill out these surveys. Let us know what you have, what you're interested in, and let's change the game.
So let me ask you this question. So I'm a veteran, so I get buried for free, right? So you're not gonna, you couldn't, the military couldn't come and tell you, oh, they need to take my life insurance money to bury me. You wouldn't.
The military?
Yeah.
Ask your question again. I'm sorry.
Like I get buried for free, but if I have life insurance, they can't come and tell you, well, you gotta take my life insurance and pay them for my burial, right?
So you have life insurance through the military?
No, I get buried for free because I'm a vet.
Because you're very
Oh,
okay.
okay.
So you're good.
Yeah, I don't know that to be asset contingent. Have you heard anything about it being asset, like it's based on your assets?
Well, I know if you have life insurance through them, even though you get buried for free, when you're dead, they take the money and give it to the burial people.
This is why we tell people,
So,
Don't
so
trust
you're not
these
getting
jobs.
buried for free because they want you to buy that insurance. I've been so like patient, because I'm the type of person that I'm not giving it up until my ears, you gotta make it sound right in my ear and in my brain and then in my spirit, because the military try to get us to buy life insurance. And they constantly, you know, and so some people bought it, but then when you die, you're supposed to be able to get buried for free as a vet. You go to the burial cemetery where all veterans are. But they take your insurance money that you done paid and give it to the burial people. And the family is not.
They don't get everything though. They only the burial cost. They cannot get the entire policy though.
Huh?
They will never, they will only take the amount that the cost for the burial, not the entire policy.
No,
If you want to have a policy,
well, I can't speak for
They
military or
take
Navy
it all
people.
because the family, what I'm hearing right now, the family is not getting anything.
Wow.
All of it is going to the people that prepared the burial, the whole thing.
I don't know if
Let
that,
me say something. Whatever policy you buy, let's say today you buy a policy, you put your beneficiaries. That's completely private outside of anybody else. Nobody else can see it unless you declare it or unless you put the military as the beneficiary. Nationwide will not pay anybody else but your family or whoever the beneficiary is in the policy. That's it. There is no if buts on it. You can go and ask anybody.
so,
That makes sense.
we need a copy of your policy and we'll get on the phone and see what's going on with it and really put you at ease, because if that's, you know, we don't wanna make.
I didn't buy it because I see that.
Oh, you didn't get it?
No,
Okay, that's good.
they giving the money to the burial people and the families. This is something I'm witnessing. The families ain't getting a penny.
And they're listed as a beneficiary?
Yeah.
But that's how you want to pass.
I don't know.
Government do a lot of things.
Another reason why, number one, get your own stuff and not the job stuff. And number two, if you have a policy, let's set up a time to sit with you and go through what you have and really
Somebody
make sure.
told me not to
And
buy
just take
none.
one and pass it around.
I'm buying.
Just take one and pass it around to, visit